Good evening, all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Tuesday, and we're at the 23rd of April, 2024, just after 6:10 p.m. Central Time. So we look at the markets. Most of the metals are down. They had a down day. They've continued that break that they began a few days ago. And it's just like the stock market. When it had its break, this is taking out all the premium that we had from Iran, Iraq, and all the other things. But that doesn't mean that they're over. After these breaks occur, the market then takes another look at itself and tries to figure out what's the next step coming in it. On the energy markets, we've sort of stabilized in them. We're not continuing that big decline any longer. We've sold off from the high in the Brent, almost $6 or so. So, okay. Again, the war premium in and out instantly. Bonds and notes still under some selling pressure, as you can see here. The markets are looking at and getting ready for GDP numbers this week, along with the PCE index. Those are going to be two very important numbers, and they'll sway the market. And of course, we're getting earnings reports that are going all over the board if you're looking at them, but primarily beats. You wouldn't think so on Tesla, but I'll cover that in the financial market and my spiders. It's pretty crazy there. Currency markets not offering much. In fact, gold dropped 40 points, and it didn't do much to support the dollar right here. So got to take a look at all things in steps. So as we look at the gold market, so far for the week, we're down 3.2%. If the market were to totally fall out of bed, it could go back to the 2141 level. That's not what I'm expecting. I can see where the market had its distribution, the war event that you had back here, and then the pullback ever since that. And that's where the market's, if you will, punishing those that bought too high in here and taking these people temporarily probably out of their positions as the in-out trader drops away. The battleground, well, I'm thinking, it doesn't mean I'll be right, I'm thinking it's going to show up at the 18-day average of closes. The Bollinger Band's the other one that could be 2270, but I lean more towards the market trying to fight a battle right there. That doesn't mean it's a buy or a sale. This market has stepped out of its trend at this point in time. And you can see in the momentum how the market is working its way down. And all the tip-offs came back here when you lost the bullish embedded reading. It happened before this whole break took place, and it just stayed overbought. It never re-embedded, and that was a warning sign in the market. Now, in the gold-silver ratio, as we popped up over this, I said I wouldn't be surprised if you want to fight at that 18-day average, and I'm still in that school of thought. I'm not thinking that the gold's going to run away on the silver right here. When we look at the silver, I'm almost in the same camp as I am in the gold, that I think the battleground's going to turn out to be the 18-day average of closes. Again, you've taken out a whole group of people that were long up here. And once again, when you lost the momentum of this market right where I'm pointing, that was the sign that this market was going to come down, and it became rather painful. In the copper market, you've now lost the bullish embedded reading. Follow me. This wasn't the way that it was at the close of business. It's losing it tonight. Now, that doesn't mean it's lost completely. It's got to finish the day like that. But if it were to finish like this, I would think that the market could make a run to the 18-day average before it wants to resume its uptrend. It could fake you out. But right here, big warning signs, and it's screaming to me. It doesn't mean it's doing that to you. Don't buy me on this break. Let's see if I can get the momentum to hold together. If not, markets often break a bit more. In the platinum, will it even reach down to the Bollinger Band? It doesn't have to, but this was the follower market. For those of you that are regulars with me know I said that all the way up here, and the market did come back down. And in the dollar, I was frankly disappointed today that the dollar lost at the close of business its embedded reading, and that means my idea to be long right now versus the euro, not quite there. It's stalled. Doesn't mean I'm wrong on the whole idea, but for this, yeah, it could drop back to the 105.02 level, another 40, 50 points lower. Okay. How would that come about? Well, one of the ways might be that you get a GDP and a PCE that gives the Fed reason to cut earlier rather than later, taking some of the premium because everybody's built in the dollar's going to be higher for longer. I'm not saying that will happen. I'm giving you the what if. That's one of the ways that it could come about. In terms of economic data for tomorrow, you don't have very much. You've got the durable goods data that's going to come out at 7:30. They are looking for an increase. Last month you had a 1.3% increase. Now they're looking for double. That's still good buying coming in there. And I don't know that the Fed will like that. Earnings reports on many U.S. companies, they're going to continue all week long. So we want to keep track of them. They do move the market. Some come out during the mornings. Others come out after the markets close. You want to keep up with them. Overall, they're beating. And they're not beating by a few. Most companies are beating. And remember, the bar was fairly low. We just broke 5% in a number of these stock indices or more. So as that's the first big break and you get these numbers, the market digests it and you get a bounce like you had today. Okay, but did that change the overall break nature of the market? Probably not just yet. There'll be a battle with some traders saying, use this rally to come out of some longs. There could be more downside ahead. And you're not going to know which one wins the battle until Friday when we get the combination where we're done with the GDP and the PCE. That's when it'll be easy to make that decision and say, we're not at that point yet, or yes, market was a surprise. We're weakening faster than we thought. Got to wait and see, but I think you're going to get some ideas this week. You put it all together, and what you try to do is come up with a game plan. And the one thing I can tell you is all of a sudden more trades are coming our way in our morning subscriber videos, okay? They don't all win. But if wrong, I'd like to be wrong for little bits, and that's what's happening right now. And if you're right, you try to catch the winners as you can, as best as you go with it. And that's what you try to do in trading. That's what trading's all about. You don't know if the trade's going to be good or bad till after the fact. And the way we cover it, we're looking at these markets every day in all different ways. The daily charts, the weekly charts. I'm mixing and matching them, trying to come up with longer and shorter term trade ideas for you. And that's the whole idea here, looking to see what they do with reasonable dollar risks on them. That's the best that I know how to do. You go to iraepstein.com, under the word research, it's all waiting for you there. I'm Ira. You can also, by the way, move your cursor up here. You'll see an icon for that. I'm Ira. You have yourself a great evening. I'll catch you in the morning.